Today's Thursday, March 20th, and yesterday Chairman Powell announced that the Federal Reserve is going to keep interest rates steady, at least for now. While the stock market has been correcting, we've been debating, is this just a very normal stock market correction, or is this the beginning of a bear market because we're about to go into a recession? So let's look at some of the economic data. First up is that Fed funds rate. That's the green line. The 10-year yield is the blue line. And in particular, I want to zero in on some of the projections from the Federal Reserve. In particular, I want to look at their estimation for GDP for 2025. That's their full year target or projection, if you will. But if we look at the Atlanta Federal Reserve's GDP Now tool, which we have looked at multiple times, their latest update is negative 1.8%. So a slight uptick from where it was just a week or two ago. This is how it would look on the histogram if the Atlanta Federal Reserve's estimate is correct. What I want you to notice here is where this red line represents the current quarter and where that is from 2022. Remember, in 2022, we did have 2 consecutive quarters of negative GDP. However, the National Bureau of Economic Research never declared that 2022 was a recession. Well, if Atlanta Federal Reserve GDP Now is correct, the first quarter of this year will be very similar to the first quarter of 2022. So if a recession is 2 consecutive quarters of negative GDP, and if the Atlanta Federal Reserve's tool is correct that we're going to be negative 1.8% the first quarter of this year, the question is really about the second quarter, number one. Number two, is the National Bureau of Economic Research going to declare a recession? Well, let's look at some other tools or some other data points to give us a clue. First up, we'll take a look at the price of copper. Historically, copper tends to decline as we go into a recession. You can see the evidence from 2008, 2012, 2015, and even the COVID correction in 2020 and the recession of 2022 that the National Bureau of Economic Research did not declare. Well, what's copper doing now? Copper is rising. That's not recessionary. It's not conclusive, but it's not recessionary. Next up is the financial conditions sub-index. As we go into recession, this tends to go above the zero line and continue to rise. Where is the data right now? It is below the zero line. However, a close examination shows it did just tick back up. So this is not yet recessionary. But as a steward of other people's money, being a portfolio manager for individuals and families, the number one thing that we're going to look at is the stock market. We believe the stock market is a strong leading indicator, and what we see lately is not encouraging, and it suggests that this pullback is not yet quite over. If we take a look at the current data, this is the S&P 500. So as of yesterday's close, you can see that the S&P 500 has tried to rally back above this 200-day moving average and has failed to climb through that. The longer it takes for the S&P 500 to break back through that 200-day moving average, the worse of an omen it is. In the top pane, we have IWV, which is the Russell 3000, a much broader measure of the United States stock market, capturing approximately 95% of the U.S. market. In the bottom pane, we've got the percentage of IWV that is trading above the 200-day moving average. So take the inverse of this number. What this is telling us is approximately 65% of the United States stock market is technically in a long-term downtrend. So this is why it might very well be difficult for the United States stock market to come out of this correction because so many stocks have been beaten up. If you have any questions, by all means, feel free to let us know. Happy to render a second opinion as to how you're managing your nest egg.